open. Okay, so today it's basically an introduction and review. I just want to know how you are, where you at, your challenges. And then like we decided today that we will do the basic accounting equation and to show you how to do the journal so that you're not going to fail. And then I will do some integrated examples of how the journals actually work. Okay, so let me just get a spreadsheet quickly. Anything you want to say? Anybody? What's your challenges that you've had this week? Nothing. Can everybody see my basic accounting equation in front of you?
Yes, I think.
Can you see the screen? Okay.
Yes.
So basically, this is how you're gonna learn how to do the journal entries. Okay. So basically, in your case, you're going to have an asset, and you always draw this T account to know what you're going to debit and what you're going to credit. It's going to be quite useful for you if you're going to do accounting. I'm sure you're all going to do accounting at some stage, and you're going to do accounting for a while. So you have assets will always equal equity plus liabilities. That's a given. So if my asset is 5 Rand, my equity can be 3 Rand, and my liability can be 2 Rand. Yes, my liability, the screen is just too big. Assets is land, building, vehicles, inventory. And in our case specifically, what we're going to be dealing with is inventory, the accounts receivable, and the bank, right? So we normally say I debit either one of these when I acquire an asset on acquisition, right? And we normally say I'm crediting my asset if I lost my asset, if my asset was stolen, sold, and in drawings in terms of an asset. So basically your assets will decrease, and that's the reason why I have the minus here. This is the reason why I have the plus here. Because here my assets will increase and here my assets will decrease. Everybody clear on this? We all know what assets is. It's land, buildings, vehicles, inventory, equipment, accounts receivable. Accounts receivable is a debtors or somebody who owes you money. Buildings, bank. Okay. Then we go to equity, and equity is divided into, on this side, under my debit, it's everything that makes me poorer. And on this side is everything that makes me richer. My wealth increases, my equity increases. So on this side, if I pay my water, my electricity, it makes me poorer. If I've paid if I wrote off credit losses, people that didn't want to pay me, it makes me poorer. Depreciation, it reduces my asset, makes me poorer. If I pay rent, fuel, salaries, wages, anything that you can think of is an expense. Purchases, let's just put in your purchases as well, because that's quite applicable to you people. Everything that increases my wealth is gonna be a credit. So I'm gonna credit income, fees earned, rental, blah, 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 anything that makes me rich. My liability is something that increases on the side. This is the part where you can't sleep at when you start making debt and you just packing on more and more and more liabilities. So this is when we go to the shop, we buy something on credit, we sign for it, there's a term, 36 months, you're going to pay me X amount with this, and there's a witness and whole big story. That will happen on the side. And that's why there's a plus, because I am increasing my liabilities. On this side is when I pay my liability, so it will decrease my liability. Okay, any questions on this table? Was that clear the way I explained it? Kisa? Any questions on the table?
No questions. Just keep the table for 2 minutes, please.
Okay. When you draw up your table, make sure that these pluses and minuses on the right side. Look here on the side, assets is a plus and a minus, and on the equity it takes the reverse. It's a minus and a plus. On liabilities is a minus and a plus because this half will equal that half. I'll just keep the table open for a minute or two. In the meantime, please don't forget to fill in the form for the attendance register. Okay. Can I change the screen? Okay, let's go back to sheet 1. So, if I say that I sold stuff to Yokise for 50,000 Rand, if I sold something to Yokise, it's going to be here. It's going to be a sale. Okay, I'm just going to make an asterisk there. Let me make the asterisk at the bottom. Otherwise, I must clean up such a lot afterwards. Okay, so it's going to be under that column. Why? Because I increased my wealth. And the other transaction is going to be bank, because obviously money came in the bank. Can everybody maybe just go to page 77, the general, which is the general journals, so that we are working with something that you can see. Okay, so in that example, they say sold merchandise for cash. So we know that the money, because we sold money for cash, we're going to get money into our bank account. So it's debit bank, credit, sales. So all I'm going to do is I'm going to write out debit bank, 120,000, and credit sales, 120,000. Can you see how easy this is? Very easy. The first example, they said purchased merchandise on account for 400,000. Now, if we buy on account, it is a liability. Okay? Because they didn't specify who they bought it from, we're just going to treat it as liabilities. Okay? So we bought it on account. So obviously my liabilities is going to increase. And because I purchased, right, it will be purchases. For the, all the stuff is purchases for you people, both your curriculums. Could be inventory, but on your system. Remember, if we used a periodic system, right, it would have been debit my purchases.
Yes.
Okay, so let's go debit purchases. How much was that? 400,000. And because we bought it on credit, it is then credit.
Creditors control.
Or liabilities, Okay. And then we're going to credit trade creditors. Okay, let's look at the other one. They say purchase merchandise for cash for 50K. So, Kisa, you want to tell me what you're going to debit and what you're going to credit and why?
Okay, which one is that? Number 3, no?
Number 3, yeah.
Purchase merchandise for cash. So we went to buy merchandise. So we need to debit our purchases.
Mm-hmm.
And then the other transaction that's going to be involved, like you said, now you say it's 2 transactions. So bank will also be involved. Bank will have to be credited.
Did you do accounting already, Okisa?
Yeah, I did. Accounting is
Oh,
by
okay.
who is this lecture? Mr. The very funny guy there,
Mr. Lesh.
Yeah,
Oh, Mr. Lesh.
Mr. Lesh.
Okay.
Yes.
Okay.
This is just a good
So, a recap. Yeah. Okay, sold merchandise on account for 240,000. Okay, anybody else? Anybody who didn't do accounting here in the class? Do you just want to hands up quickly? Anybody who's never done accounting before? You can just raise your hand on the. Everybody do accounting. Okay, no, Beulah, never done it. And then who's this? Okay, Grace also. So there's 2 people that has never done accounting. 3 people. Okay, so for those people who never done accounting, you need to ask the questions. Okay, let me just see where am I now. Okay, so the last one, they said the trade, they said sold merchandise on account. So looking at this table, what am I going to do if I sold merchandise on account? For the people that didn't do accounting, Conrad, you want to answer?
Oh, you can see I'm here. If you sold
I can
obviously your
see.
bank entries, so debit bank, and then I think the other one was sales, credit sales.
Anybody want to say why it's wrong?
sold merchandise.
I think because he bought it on account.
Yes. So debit,
Did you say bought it on account?
accounts
Or did you say it was
receivable.
his purchase?
Yeah.
Yeah. Okay, so it's not bank. Okay, you didn't hear properly what I said. Okay, so let's look at number C, where they say prepare year-end adjusting journals. Okay, so we need to prepare year-end adjusting journals. You know what happened at year-end? Anything that is like in our income statement or on the spot, say anything that is involved with this spot, we have to close it off to nil. Does anybody know why we close this account off to nil? Anybody want to take a chance why we always need to close and do year-end adjustments?
To balance the books.
No. No, Richardo. That's not what I was looking for. Let's just say that. Anybody else? What's Grace? You can put your hand down. You can just there's a icon there where you can say lower hand again. Anybody else knows why you get it back to you have to write it off? It's because the income statement is a temporary account. So at year end you close off all your accounts. That's why we do adjusting. So let's look at the adjusting. They're asking us here to do adjusting entries. For the people that is in my fact class, you don't do adjusting entries. Okay, so you can just like listen with one ear. Okay, so we know that cost of sales, okay, we were debiting cost of sales, crediting inventory. Okay, so when we adjust it, right, they say here C, B above. So you're going to debit your cost of sales. You're going to debit your inventory of 210,000. Okay, and you're going to credit your purchases of 450,000. Okay, let's just do that quickly. So we know that we purchased for 450,000. Okay. Now the purchases is the one that that is my income statement item that I need to credit. So I need to credit the purchases of the merchandise. Okay. So let me just write here credit purchases. Ach nee man. So I'm going to credit my purchases with 450,000 because I want to write that off to nil. So then I'm going to debit my cost of sales, and my cost of sales they gave me was 240,000. So the balancing figure would then be my inventory. So I'm going to debit the inventory, which is my balancing figure. 450 minus 240 is 210,000. I think there's one note too many. You get what I'm saying? Everybody with me? Let me just recap.
Can you please ma'am repeat that again?
Okay, at year end, they had asked us here to do a year end adjusting journal. Now, when we do a year end adjusting journal, the purchases is an item that is my income statement. Okay, so purchases is the one that we're going to write off. Now, the purchases was, can you see there by transaction 1, we debited purchases of 400,000. Can you see that?
Yes.
Yes. Debited purchases here of 450,000. So to get this off my books, I'm going to credit the purchases of 450. You with me?
Yes.
Right. Now my two debits, okay? We're going to have to debit our cost of sales like they showed us here in B. So I'm going to debit my cost of sales. I got that figure. Then my inventory is the balancing figure. The inventory is actually the balancing figure that I have to calculate. So to calculate it, I say 450 minus the 240 is the 210. But if you look there, that is also your closing inventory.
Yeah,
okay.
I can see that. Yeah. Thank you.
Okay. Let's do another journal, some more journals. On the next page, use the same information to prepare the journals, only that this is a perpetual system. Okay, so let me just mark this here under periodic.
Sorry, can I ask a
But
question?
now, yes, you may.
I'm a bit confused here. They sold the merchandise for cash and they sold on account, but they only used one for cost of sale. Doesn't it count the one that they sold for cash? Or is that something different? Where's the 240 coming from?
The cost of sales is the 240 that we calculated in B, in the gross profit. Can you see there? We calculated the 240.
I see here there's sales where they added the 120 plus the 240. They got the 360,
Okay.
but where's the 240 coming from? That's what confuses me.
The 240, why did we get the 240 the other day? The cost of sales. Anybody remember? Let me just see. sold merchandise on account. By number 4. They said sold merchandise on account.
So we're only using that.
Hold on. That is not it. Okay, there's your cost of sales. Your opening balance. Remember that the exercise that we did the other day? The opening.
Yes.
We back to this again. Opening balances plus my purchases, right? Less my closing.
Okay, I remember
My
that.
closing inventory. Okay, so my opening was naught. My purchases was 450,000, and my closing inventory was 210,000, which they gave us. Okay, and that gave me my 240,000.
Oh,
Okay, so
okay.
that is my cost of sales.
Okay. Thank you.
Okay, so let's just do this according to the perpetual system. If I made a sale, how would it affect how would this affect the sale on a perpetual system?
I think it's now that cost of sales is included.
Okay, that would be step number 1, debit bank, credit sales. Okay, but we have to now, did they give us the cost of sales? Yes, they said somewhere that, did they say somewhere there's a markup?
Markup.
Yes, there's a markup of 50%. Okay, so we have to take 120,000, right, divided by 150 times 100. And that gives us the 80,000. Are you with me?
Mm-hmm.
Yes.
How did I delete that now? I wanted to copy it over. Okay, so we said if there's a markup on cost, 120,000 divided by 150. How do we account for this 80,000? What are we debiting and what are we crediting? Let's look at the sheet here. Let's look at the sheet. What am I debiting and what am I credited and why? Conrad, I think this is not in your curriculum really, but you did answer me the other day when I asked about this, so you sort of gave me this answer.
Me?
Yes, in one of the other classes, and I said, yeah, but we don't do that.
Oh, I don't remember.
Okay, can I try?
Yakisa, anybody else? Yes, you can try.
We debit cost of sales and then we credit inventory. Why? Cost of sales, it's an expense. Cost of sale is an expense.
Yes.
An expense increase
Yes.
on the left-hand side. And then inventory of merchandise is an asset, and then asset decrease on the left-hand side.
Give her a round of applause and a loud one. No, man. So you're gonna debit your cost of sales for 80,000, and you're gonna credit your inventory because my inventory now is getting less in the store.
Yeah.
You remember now, Conrad, you told me that. I think it was you.
No, it's not me.
Oh, okay. All right. So let's look at the next one. Let's look at the 400,000. They purchased merchandise on credit. Yes.
So remember, we are working with two methods here. No? We have the periodic and we got the perpetual. Now, under the perpetual system, the cost of sales account is updated consistently when inventory is sold or ever when inventory is issued or received.
Under the perpetual, is that what you said?
Yes.
Yes.
Okay.
Yes. So under perpetual, there's always 4 sales, 4 transactions.
Okay.
Under the periodic, there's only 1, 2 transactions.
Okay. Okay, because I went through the study guide today. I got a little bit confused, and I did put a question mark on those two, and I wanted to ask you, why is it like that? But now you just gave me the answer.
Because in a perpetual system, the cost of sales is continuously being updated. So at any given time, you account for your cost of sales and your inventory. Whereas a periodic, it's once a year. So there's no need to do it. You can just go count at the end of the year and then they update the system.
So for every transaction, meaning that for every item sold or
sold, only sold.
Or issued.
Yeah, you then update. Okay, let's get to one where we're going to sell it.
Okay.
We were now sold. Let's get to one where we purchase. Then we can see. Okay, so here they purchased for 400,000 rand. So how do we account for that?
Are we referring to transaction number 1?
Yes.
That's remember, this time we are purchasing on account. So which means we are buying on credit from the supplier. So there's obviously going to be 2 transactions involved. One will be trade payables, and the other one will be the inventory.
That's it. So here you're going to debit inventory and not purchases. Trade payables or trade creditors, whatever you want to call it. Okay. Let's look at the other transaction. Purchase merchandise for 50,000 rand. Is that for cash? Purchase merchandise for cash for 50,000. How are we going to account for it now?
It's the same thing like the previous one. We are purchasing, which means our inventory account is gonna go higher. We're getting more stock in, so meaning our assets are gonna increase.
So tell me, give it to me, debit.
We debit your inventory account. And you credit your bank.
Okay, worth how much? 50,000.
Yes.
Is he right? I don't think he's right. Oh, purchase. Sorry, purchase. You are right. Okay. The next one, sold merchandise on account for 240. Anybody except your Kisa? Kisa, you're in the back seat now. Back burner. Anybody else wants to take a try? Witness?
transaction number 4.
Yes.
Sold merchandise for credit on accounts.
Mm-hmm.
I think on paper show, ne? On paper show.
Yes.
We debit debtors. We debit debt. I don't know if I'm correct or wrong, but we debit debtors control and credit sales.
With
And
how
then I
much?
think cost of sales is involved here.
Okay. So we're going to credit sales. So how do we
Yes.
calculate the cost of sales?
I'm not sure how we calculate it, but I think cost of sales we're gonna debit and credit inventory, the other 2 transactions that are involved.
But how do you calculate it?
You work it out. We did it in the first example.
240,000 divided by 150
Yes.
times 100. People, you must know how to do this, eh? So then that is 160,000. So I'm going to debit my cost of sales with 160,000 and credit my inventory with 160,000. Remember my inventory, if you get an amount, remember it must be less than that amount. You cannot have a higher cost of sales. That is why you're dividing first by the bigger amount. Just remember that. Okay, so it's debit cost of sales for the simple reason cost of sales is an expense. And I'm going to credit my inventory because my inventory got less. I booked it out of the store to sell it. Okay, let's look at another example. 4.6. KwaZulu-Natal purchased merchandise on account from the supplier. For the people who didn't do accounting, maybe you want to try this. We purchased merchandise. We're only working on periodic system now. So for the accounting, the legal accounting people, you can get in here as well. They purchased merchandise on account from the supplier for 400,000. Don't forget, here must be a date in here as well. I didn't put the dates in. I'll put it in now. Oh, and one thing also, this goes for everybody. Do not forget to put narrations. Narrations is a lot of marks that you miss. When you do general journals, there must be narrations. So you're either going to say here, recording of a sale transaction. Here you can say purchases on credit. You're going to have to narrate it, eh? Purchases on credit. Here you're going to say cash purchases. And here you will say recording of a sale. So you need to give me that as well now. Okay, with the date. So for anybody except the lady that just answered now, who got a round of applause, and Yukisa. We're funny with you, Yukisa, tonight. Eh? You didn't get a round of applause for all your hard work.
No. It's fine, Aziza. No stress.
Okay. They purchased merchandise on credit from a supplier for 400K. Anybody? Except the two?
You purchase merchandise from the supplier on credit.
And you need to tell me why also you're doing what you're doing.
Okay, the purchase on credit. Our inventory is gonna increase.
What? I'm gonna debit my inventory.
Gonna debit inventory, and then our liabilities,
Why are we
which is
using
creditors. It's gonna
periodic?
using periodic.
Periodic,
Okay. Yeah, we debit inventory. We debit
okay.
purchases, and then we credit creditors.
Okay.
And then we credit this with 400,000. And what is the recording? What am I going to record here?
Purchasing.
We're gonna say purchase inventory on account.
Okay. Okay, the next one, they purchased merchandise that had a cost of 5,000 was sold to the customer for 7,500. Okay, how do I record that? Anybody except the lady that just answered? Where's my friend now? R. Ricardo. Is your name Ricardo, Rix? Or Ricardo?
Ricardo.
Okay, Ricardo.
But I'm
Okay,
not
Ricardo, what do
answer.
you say? Okay, you're shy.
No, I'm not shy. I'm listening.
Okay, you're listening. Who else is there? Firdaus, you want to answer?
So we will debit bank and credit sales.
Wow.
How much money?
7,500.
And what is the journal entries?
It will be sold merchandise.
Are you reading out of the book?
No.
Sold merchandise or cash?
Yeah.
Okay. If this was a periodic, a perpetual, how would you then record it? Firdaus.
Wouldn't it be the same?
No, it wouldn't be the same.
Oh no, it would be inventory.
Tell me. Tell me, what did the increase be? Debit, bank, 7,500. Was it 7,500?
Yes.
Okay. And then credit,
Your
sales, 7,500.
Credit sales.
Right? And then debit, your cost of sales, 5,000. Credit your inventory, 5,000. Now, how much did they mark this this product up on? By how much? What percentage did they mark it up? Let me catch the people that's looking in a book. You can give me your answers. I'll just jot it down here quickly, everybody, like we did the other day. What does okay, Ricardo's not in this class. Lisa, what do you say? What is the markup percentage?
Isn't it 50%?
Is it okay? Anybody else? Firdaus, what do you say? Is Bilkis here tonight? Bilkis is very quiet. Oh,
I'm
Bilkis
here.
isn't here. Oh, are you here? Bilkis, what do you say? What is the markup?
Also 50%.
Yukisa, what do you say?
It's 50%.
Okay. Okay, so it's a 50% markup that they applied. Okay, let's look at the merchandise. The merchandise to the value of 10K was returned to the supplier. And the periodic, how would we account for that? And under perpetual, how would we account for that?
The trade creditors account would be debited, and the purchases return account would be credited. That's for the periodic inventory system.
And that is for 10,000. Okay, because if we debit the purchase, we have to credit the purchase returns. Okay, and on this system, on a perpetual, how would we account for that?
Trade creditors would be debited.
Okay. And what account will be credited?
Inventory.
The inventory account.
Yes. We will credit our inventory. So the actual thing is, this just means that we're going to basically have 4 transactions. That's the only difference. And we're going to use the account called inventory. And here we will use the account called purchases.
Okay.
That's the only difference. Let's look at the last one. A customer returned goods for a refund of 1,500 Rand. Under periodic, how will we account for it? Maggie, do you want to answer? Okay, Maggie don't want to talk to us tonight. Who else is here? Justina, you want to talk to us? A customer returned goods for a refund of 1.5.
Sales return will be
Bali
involved.
Zulu. Sales return, what am I going to do with my sales return? Debit or credited?
So now debit sales return.
Why are you going to debit it?
Because remember, we are receiving the goods that was returned from the debtor. So which means it's going to decrease our assets.
And previously we credited. Yes. What are we going to credit?
The credit will be
the bank, because we're getting money back into the account.
Yes.
Okay. Gee nie vir jou kans om klaar te sê nie, né? Excited. She's excited. Okay. And on my perpetual, how am I going to account for the sales return now?
On your perpetual, still gonna debit the sales return.
Mm-hmm.
Then we're still gonna
credit the bank.
Credit the bank.
Yeah, bro.
There's 2 transactions.
And then, yes, there is.
Then cost of sales.
So what's the other?
We will debit inventory.
Debit your inventory.
We credit our cost
Why?
of sales. We are.
Why are you going to?
The asset increases.
Exactly. Okay, I think that the most of you people now understand the journal entries. Okay, let's look at one where there's example 4.4. Okay. If I say bought consumables for 50,000 Rand cash, what am I going to debit and what am I going to credit? Under perpetual system, if I use a perpetual system, bought consumables for 50,000.
Inventory is going to be involved. Then that we're going to debit inventory under the perpetual. You said under the perpetual, am I correct?
Yes.
Okay, and then bank, you bought goods on for cash or on credit?
For cash.
And then bank will be involved as well.
Okay. Now it gets interesting. Okay, now tell me something. Let's look at this. You issued consumables of 6,000 Rand to production.
Woo!
If I issued 6,000 Rands worth of consumables to production, but you need to tell me why.
Remember, consumable is for the stuff that we need on the floor for the factory to manufacture the product, to make the factory work. Am I correct?
Yes. Yes.
So the stuff that, so for example, like your domestos, day to day, you need to clean up the stuff. So that's consumable.
Okay. So just give me 1 second quickly. I just want to close this door here.
Can you go up on your Excel spreadsheet, please?
Yes. Let's go up. Okay, so if we issue consumables to production, how do we account for that?
The problem is I've never done it in my first time doing a MAC1501, this one, management accounting. So the terminologies have now changed because in normal accounting we will have used a different.
This was not in normal accounting. Yeah.
This was not in normal accounting.
Okay. Yeah, this is now management accounting. So you have to know.
Okay. Which example?
I think for the FAC 1503 people, I'm gonna be dealing now with production overheads, and that is just gonna confuse you. I don't know if you want to leave the discussion, because everybody, are you people comfortable with the debits and the credits like I showed them now? So then I think that you can leave because I'm only gonna do production overheads now, and that is not part of your curriculum. Okay.
Which example
But
are you
please just okay. If don't worry about the example that I'm referring to. If I say I issued production overheads for 6,000 rand, how am I gonna account for that? What is happening?
Production overheads account would be debited and your consumables inventory would be credited because you're issuing consumables to production. Is that how you would record it?
So you are debiting my production overhead account, and you are saying I'm going to credit my consumables or my inventory.
Yes.
Where does this account lay? This production overhead asset, income, expense, liability. Yeah. So you're going to debit your expense account and credit your inventory or asset account. Okay, Yukisa, you're on the ball. Okay, if I issue direct materials costing 150 and indirect materials of 10,000 to production, how do I do those journal entries? If I issue direct materials of 150 and indirect materials of 10,000 to production.
Direct materials.
The easiest leg of the transaction would be to credit inventory. Am I right? Because we issued it to production.
Yes.
Yes.
Okay. That's how you figure it out. Okay, so now let's figure out that the 50,000, the 150,000. Okay, so if you so if I issued the 150,000 direct materials, where would that go to? That would go to my WIP account, Moss, with 150,000. And the 10,000 of indirect is production overheads account. With 10,000. And that's how you make up your 160. I think somewhere at the beginning of this chapter, let me just go back with that. If you look on page, let's just go through it on page 30. Let's just look at that. Let me just put this away. And let's just look at page 30. Can you follow those T accounts there?
Yes.
Okay. Did everybody put their student number in on that form? Please. Okay, so let's look at that example and then you can see how it flows, the T accounts. Okay?
Oh.
Yes.
Hi, sorry, man. I think I came a little bit late, so I can't see the the register.
The screen.
Yeah, the register, the one where
Oh,
student
okay, let me just repaste it quickly.
Okay, sorry. Thank you.
Now it's cool. I think you all need a 2-minute break anyway. Where's the form?
So these are the accounting what you can expect.
Okay, there I've just put it in. If you can just complete that.
So Aziza,
where's the example? Yes.
So the example there on 3.2 page 30. So this what we must know for these T accounts, production of this. So this is what MAC management accounting is all about with these accounts.
That's it. Yes. Yes. But now on example 2.3, there's no numbers here. I imagine I saw numbers. Let's just look here. Did they give an example?
This one.
You see, I'm sure I saw one with an example somewhere.
They are referring to.
No, okay, let's look at this one. It shows you ABC. Okay, just look at it now. If you look at the flow of cost through the general ledger of a company is as follows. Has everybody got this up in front of them here? Page 30, example 2.3. Okay, if you look at A, inventory of materials, direct and indirect, is purchased for cash. So obviously, I'm going to debit my inventory account and I'm going to credit my bank account. And you see that 42,000 that they're talking about there. If you look at B, right, they say inventory of consumables is purchased for cash. See, you're going to debit your consumable inventory and credit your bank. Is everybody following me what I'm saying? C, they say wages are paid in cash. Can you see? You'll debit your wages, credit your bank. Are you following me?
Following you.
Is everybody following me? If you look at number D, direct materials are issued to production. Okay, where's number D? No, okay, number D, that would be your work. Okay, so I'm going to debit my work in progress, credit my material account for 25,000. Then they say number E, indirect materials are issued to production. Okay, so when it's indirect materials are issued to production, my production overhead clearance account is going to be debited and my materials account is going to be credited. Alrighty. When I do my consumables are issued to production, right? If consumables would also go to my production overheads account. Indirect labor will also go to my production overheads account. Factory electricity, factory, emphasis on factory electricity will also go to my overhead account. Rent, factory, emphasis on factory, will also go to my production overhead account. Okay. Production overheads are assigned to the work in process. So the work in progress account you're going to debit and you will credit your production overheads account. Okay. My finished goods are transferred to inventory of finished goods at accumulated cost. Right? So you're going to debit your finished goods, but you're going to credit your work account. Okay. Finished goods with an accumulated cost of 350,000. Where's number M now? Okay, so you're going to, is it 35,000?
Yes.
Yeah, okay. So it's a 35,000. So you're going to debit your cost of sales. Credit your inventory account. Then your bank account, you're going to credit all your bank amounts because you issue to your manufacturing, it's much money going out. So you credit your bank with material, consumable, blah, 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 blah. And I don't know if they made sales. Did they make sales somewhere? Oh, finished goods with an accumulated cost of 350,000. So where did they get the 55,000 from? Where's the sales account for 55? Yeah, maybe that's just a fictitious amount. Oh, they balanced it out. Okay. So do you understand how the process work, the ledger entries and the journals work in a factory?
I'm gonna go back to my question again.
Yes.
My question is, for management accounting, production overheads, inventory of work, and inventory of finished goods, these are the T accounts that you should master. That's what I want to know.
Yes. Yes.
Okay.
You're going to have to know these T accounts.
And I have to know this T account.
Yes. If you look at inventory of materials, that is an asset account.
Yes.
Because you're debiting on the consumable, same story. If you know that basic accounting equation, then you can master this very quick. Let me just run through it again. Must I run through this exercise again?
Yes, please.
Let's go through it again.
Let's go through it again. Okay. They say in A, inventory of materials, direct material and indirect material is purchased for cash. So if you look at the first T account, if we say inventory was purchased for cash, we know we're going to debit inventory, credit bank. Can you see that 42,000 was debited there and the bank was credited at the bottom with materials? Is everybody with me on the same page? What they're doing there?
Yes.
You okay, sir?
Yes, Aziza.
Okay. Are you with me?
Yes, I'm with you, my lady.
Is everybody with me?
Yes, Aziza, I'm with you.
Okay, let's look at the next one. Inventory of consumables is purchased for cash. So we're going to debit our consumables account, which is sitting here on my table, the assets. Okay, yes. We are going to credit our bank for 10,000. Okay, so we're going to credit on this side, if you can understand. Okay, wages are paid for cash, right? Wages would sit here in my equity account. Okay, and I'm going to credit my bank. Everybody with me?
Yes.
I think this question they didn't put the amounts in.
The amount in
Very silly, but when they did the answer, then they had numbers in. I don't understand. Okay, direct materials are issued to production. So when materials are issued, it's an asset. We reduce our inventory account. So we are going to credit our materials account. Okay, we're going to credit our inventory and we're going to credit our direct material. Okay, for 25,000. And that is in our work account, our work in progress. Okay, the next one where they say consumables are issued to production. Okay, that is a production overhead account. So when it's issued to production, when it's factory labor, when it's factory electricity, factory rent, factory blah, 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 it goes to my production overhead account. When it says indirect labor as well, we're also going to charge it to our production overhead, because that is what production overheads are. Okay. So I did the direct labor. So direct labor, where would that be? Direct labor is assigned to production. Direct labor goes to my WIP account. So I'm going to debit my WIP account, my work in progress. And I'm going to credit my wages account. Yep. Okay. Okay, we dealt with all the others now, the indirect effectively. Let's jump a few and we go to K, which is our production overheads are assigned to the work in progress. What would we do with that and why?
15,000.
Okay, because they're telling us that it's assigned to our work in progress. So you're going to debit your work in process. We're going to credit our production overhead account. Okay. Finished goods, which is transferred to the finished good account. Okay. So if our finished goods, we're going to debit our finished good, our inventory of finished goods. Okay. And we're going to credit our work in process account. Okay, and then they say finished goods with an accumulated cost of 350,000 are sold for cash. Okay, what do we do with that? We assign that to our cost of sales. So you'll debit your cost of sales account and credit your finished goods account. This is just something that you need to practice. Practice. I don't see more of those ledgers.
No.
Ledgers in the book. Or T accounts. That's the only one. I think that they just wanted you here to understand the flow of how it, from the time when you issue something to production, right up until the time that it's completed. But I think you must just go through it again and you'll get a better understanding of that.
But my question still stands.
What's the question?
Sorry? I say I'm asking, my question still stands. Because remember, this accounting is totally different to compare to the other two accounting that I've done with UNISA. Because it was my first time seeing production overheads, clearance, and inventory, all that. So we must master those three accounts.
Yes.
I'm not worried
yes,
about
you must.
I'm not worried about the material, consumable, and wages and bank. Those are the basic ones. But the production overhead, the inventory of working in progress, the inventory of finished goods, those are important. You need to know what needs to go into the debit and to the credit side.
Yes. Yeah, you have to master it. But Iki said there's a very little marks are allocated from all the question papers that I've seen. It's not a lot. That remember the journal, between the journal entries and these T accounts, I don't think it could be more than 7 or 8 marks that I've seen already. But still, like I say, 7, 8 marks is the difference between pass and fail in this subject. Let's just look at people we know on. Okay, so there's another example that I want us to look at. Let's just see if there's more. Okay, let's look on page 66. Okay, on page 66 there's quite a nice example, and they say the following. The following of the inventory transactions of lots of stuff a retailer for the financial year ended 31 March. Right? And they give us all these transactions. Then they say on the 1st of April, the value of physical inventory on hand was 5K. And on 31 March 2017, the value of physical inventory on hand was 41K. Lots of stuff applies a markup of 15% of cost on all goods. So then they're asking us here to prepare journal entries for all the above transactions on the perpetual system basis. Okay? So the first thing that you're going to know, we are on page 86, question 6.
Okay, thank you.
Okay. So let's just break this down and let's look at this one. So in 6.1, they're asking us to prepare the journal entries for these transactions. So what is our first leg of the transaction? You sir?
You're on page 86 now.
Yes, 86, question 6.
Okay.
Let me just write it here. Page 86, question 6.1. And remember, we must do the narrations as well. But this 6.1 we can do in 2 minutes because there's no production overheads. It's so easy.
Offloads transaction according to perpetual.
We debit inventory and we credit creditors.
We debit inventory and we credit trade creditors. Yebo. And what would we narrate?
Recording of inventory on account.
Yes.
Purchase of inventory on account.
Okay, so we're gonna debit inventory.
Cash.
For 114.
Paid for.
And we're gonna credit trade creditors. And you said it was recording of inventory.
Payment of delivery cost inventory paid of delivery cost on.
Okay, let's look at the next entry. They paid for delivery for the inventory of cash.
Inventory. I think we debit inventory and credit the bank.
Okay, debit inventory.
And we credit
with 2,000. The bank with 2,000.
Yes.
Okay. So let's look at the next one. They said sales of inventory on account. And that was 23,000.
Yes.
People, the problem is you're very slow. We need to move faster with these entries because in the exam you need to work. Your time is going to kill you. Okay, what are we going to do, debit?
Debit your trade debtors.
Because it's an old word, I don't know why they use it here. It's supposed to be trade receivables. Okay. 23,000 and you're going to credit
sales.
Sales. Okay, and what are we gonna record it as?
Sales on account.
Yes, sales made on account. All right, next one. You paid for the delivery of goods to the customer in cash. Paid. Is that all? Is there more transactions? Vikisa, is this right? Is this correct? That
Yes, that is correct.
doesn't look right to me.
But we must say.
We're supposed to update cost of sales also.
That's it. Yes.
Cost of sales.
Okay. So you're gonna debit your cost of sales with 20,000.
The markup of 115.
Okay, and you're gonna credit your cost of your inventory. 20,000. So what is the markup here?
15%.
Yeah. Okay. So if you're gonna pay for your delivery of goods for 1,000 rand, are we gonna count for that?
Debit bank.
Bill. Debit bank. Debit bank. Credit.
We credit bank.
Sorry, we credit bank. And we debit.
Okay, and what do we debit?
The
Delivery.
goods inventory. Yeah.
Okay, let's just test your memory of the other day. If I sell something for 196,000, no, my cost is 196,000, and I apply a 30% markup. What is my selling price?
You said your cost is
196,000.
And your markup is
30%.
And you want the selling price? Is it 254,800?
Okay, anybody else?
You said 196.
Yes. I've got a 220,800. Anybody else?
196. Aziza?
Yes.
Sorry, I'm sorry to disturb you again. You said the markup is 30%.
Yes.
And then you said it's 196,000. It's gonna be 19. Yeah. Yeah, it's going to be 2,258, 258.
25.
No, 254,800.
Okay, so that's correct. The 254,800. Okay, if I had a selling price, okay, let me just ask. Okay, I don't have any more for you. Let's continue here. Let's continue where we left off. So, they returned purchase inventory. Okay, yeah, purchase inventory on account for 30,000. What are we going to, are we going to record that?
We're gonna debit inventory and
Okay.
debtors debit inventory and then creditors control trade payables.
Okay. Alrighty. And then let's say paid for delivery of inventory in cash. 500. Paid inventory, we're going to credit our bank.
Yes.
500.
Yes.
And we're going to debit our
Merchandise.
inventory.
Yes.
500. The last one was returned unwanted goods to the supplier for 10,000. So when I return unwanted goods to the supplier.
We credit trade payables and debit inventory.
Why did you choose trade payables? Yes, I'm with you. Why did you choose debit trade payables and credit the inventory? Why didn't you say debit bank?
Hello?
Yes. Can you hear
Tita,
me?
can you hear me?
Yes, I can. Yes, I can hear you.
I wanted to ask why, just check here, why are we not using carried on purchase and saying inventory for that 1,000 rand when we paid for the delivery of the goods sold? And we on the second transaction.
Because I didn't.
Paid for
1,000
delivery
rand.
of
Oh,
the inventory.
paid for the delivery of the inventory cash. I didn't account for that one. I think I skipped that one. Okay, so you're gonna debit inventory purchased on account. Oh, you're gonna debit your inventory and credit your bank. Paid for the delivery of the inventory in cash. So they had to. You can't debit your inventory of merchandise 2,000. You're gonna debit your delivery fees.
But don't we say it's carriage on purchases? Because I see
Carriage
you have
on purchases.
Yeah.
They did.
Aren't you using that in the period inventory?
Yeah, you wouldn't say carriage on purchases.
Wouldn't you say that?
No. I would say debit delivery fees. Because they paid for delivery. Unisa is saying in the book, they're debiting inventory of merchandise. But why are you debiting inventory of merchandise? Because also, you know why they're saying debit the inventory of merchandise? Because the cost of the merchandise include the delivery fee.
Okay.
So that's why they're
Okay,
saying
I
debit the,
understand.
yeah.
Okay, I'm with you. I understand now.
Okay. Anything else?
No, that's all. Thank you.
What was the last one I was busy doing with when I asked you? I said this one here, debit trade payables, credit inventory. Why didn't you people say bank? Is there a reason why you never said bank? Because the question just said that the question just said
we return the goods
yeah.
to the supplier.
Yes.
Mm-hmm.
So when we return the goods to the supplier,
But credit trade payables.
yeah, we taking it back
To the supplier.
Okay, but you could have bought it cash as well and debited your bank.
but they don't.
I'm just asking your school of thought, but it's because can you see how they formulate the questions, and that's how they do it in the exam also. It's like you must use your common sense all the time that they were talking about this particular purchase which was on account. So now you must automatically know that that purchase was for that. They're not like in the accounting fact where they will be specific and say that this purchase belonged to, everything is separate. Yeah, it's almost like it's one flow. You must just follow on. You get what I'm saying?
Yes.
It's like you must use your common sense at all times. What they want you to do. They're not specific. So you just need to. So question 1 depends on 2, 3, 4. It's not like fact where it's independent stuff. I think that should cover the journal entries, and I think that we covered a lot tonight. So all the other stuff is just basic the same. Things that you need to practice. Okay, so we have made a change tonight to do our journal entry, production overhead amounts and things. I hope it was helpful. So when I see you again on Saturday, then
Not tomorrow.
was it helpful to you?
Yes,
No,
it was.
no, not tomorrow.
It was
Saturday. Let me just
Why do I think tomorrow is
recording.
What time on Saturday?
Saturday is a normal 1:30 slot.